Okay, so I'm going to elaborate a little bit more on mortgage investments because that is one of the industries that I have been quite involved in, is one way that you can earn a high return on your investment to then potentially start hitting 6% overall in your portfolio. So a mortgage investment, think about it the simplest way. Your own mortgage in your house was actually funded. Yes, the bank gave you the money, but that money came from investors. The investors basically purchased mortgage-backed securities or mortgage investments, and that money then was borrowed to you, and they receive a portion of the interest that the bank is charging. And why are they a very, very good tool to use as part of your registered investments? Because it's a more secure way of investing, because it's within a fixed income investment, which basically means that you know what are the terms of your investment, you know what interest you're going to be receiving, and is secured against a property, is registered against a property. And as most of you potentially know, real estate in Canada has been very stable over the past decades. And one of the reasons why Canadian real estate is very stable is because of the financial structure that is based upon. Unlike the rest of the world, prior to 2008, some of those mortgages being extended to individuals, they were not following the same strict standards that Canada has and had in terms of lending procedures. So that basically meant that the financial industry made the mortgage-backed securities or the mortgage lending a little bit more secure and less risky for them to be jeopardized. So that's one of the reasons why it continues to be stable. As you know, right now, interest rates have dropped. And what that causes is that it causes a further compression into cap rates, as it is cheaper to borrow against real estate. And what that does is that it increases real estate values by compressing the cap rate. As potentially some of you have noticed, interest rates have dropped, as well as the prime has dropped, and private mortgage investments have remained fairly stable. And to elaborate a little bit more on real estate as an asset class, I would like to bring Wenzel Hoberg to talk about real estate on a macro perspective and why we consider this to be a very valuable asset class and an asset class to invest, either through private mortgage investments or through equity itself. I'll let Wenzel talk a little bit more about it.
So Wenzel, thank you so much for agreeing to meet with me and to chat a little bit about real estate. So the first question that I would like to ask you is, globally, how does Canadian real estate compare to other countries?
Yeah, hi Victor, nice to talk to you again. I think the question about real estate in the global portfolio has changed quite a bit over the last couple of years. People have upped their real estate allocation. Normally it used to be 10% allocation to real estate. A lot of people have moved that up, and mainly because the bond markets have changed. Interest rates are lower and sometimes negative in Europe. So I think people are looking for real estate to contribute income to their global portfolios. And on an international scale, that has resulted in a lot of the insurance companies, pension funds, moving so much capital into the real estate that cap rates have moved down, and there's a lot of pressure on investment rates and returns. And you see it especially in the big markets like Europe, US, UK. Those are the big investment markets where the global capital is congregating. I think Canada is a bit different because Canada actually has big global players itself. We have a big kind of pension fund system that is aggregating capital and distributing on a global level. So for them, the Canadian real estate portfolio is much more of a solid base, like a groundwork investment, where they actually move most of the capital abroad, which means that the market itself is is often too small for international entrants, and the domestic players are quite solid and long term, which means that the market really here is still on a normal level when it comes to cap rates and bond rates and maybe not bond rates, they also went down, but cap rates and financing rates. So I think overall you have, a good pricing level in Canada compared to, globally.
So that leads me to my next question, which is why to invest in Canadian real estate? So more specifically within Canada.
Yeah, so again, Canada has, the stability in the market, which means that rates are still at normal levels. I think what we do see here is that big players are shifting their portfolio from, a lot of office and retail exposure to more, industrial and residential. And again, this is a reflection of where global trends are going. But I think you don't have the same weight of capital, in moving the market yet. And so therefore, your entry price is still, more attractive. I think the other aspect you have compared to most other established G8 markets is that you still have the dynamic of urbanization and immigration. We do have, regional markets around the cities that are growing from urbanization, from rural people moving to the city, and that are aggressively actually growing from international entrants, immigrants, and the educated and young type coming to cities. And therefore you kind of have a bit of emerging market dynamic in Canada that you wouldn't have in most other established G8 markets. You have it a bit more in the US, but a lot less in Europe or in Japan. So I think that gives it some growth perspective compared to other markets. And given the scale of the market, not a lot of people are looking around for opportunity. So as long as you play, I'd say, below the pension fund level, I think you still have a more normal and local market for real estate investments.
Talking a little bit more about mortgage investments, which is an investment instrument that we are talking about within this presentation. What do you think of investment mortgages? How do they compare against other real estate investments?
Yeah, I think the first question is, how do you access real estate, as a private person, as a private investor, high net worth or normal? And I think that the biggest issue about real estate, it's very lumpy. The investment sizes are large, and it lends itself to large institutional investment, but it's quite hard to do it on an individual basis. Most people have their personal home, they might buy some apartments, but any of these investments require large capital, lots of know-how, and they are not well diversified. You might have one tenant or two tenants, and if they don't pay, it's an issue. And therefore, in order to break it down, you either need to go into very small apartments that are in the residential sector that is generally quite more aggressively priced in Canada because the income to price ratio is quite high. And then you have the commercial market, which is even which is probably on a better, more normal level, but it's too chunky, too big, and it takes a lot of know-how to invest. So I think the best way to diversify yourself as an individual is to go into the mortgage market, where you're really taking a piece on the capital stack that is attractive from income return, and you take the piece that is reflective of your risk appetite. But you can also cut it down in smaller pieces where from $10,000, $20,000, $30,000 investments, you can already make a meaningful contribution into each deal. And therefore, you can diversify your portfolio across different asset classes, but also more tenancy and location and all that. So I'd say that's the main attraction in mortgages. You can do the same in REITs, but of real estate investment trusts. So basically, you're buying REIT shares. But I think the issue there is then it becomes much more of a stock and equity investment with a lot more volatility and maybe less of an income return and less stability in your portfolio. So I think you could do both, but I'd say mortgages give you a bit more that stable aspect in your personal portfolio. And I also believe that you need to diversify away from just your personal home, because that normally tends to be the largest piece in your personal portfolio.
How do you think COVID-19 is going to affect real estate within Canada? And what are some trends that you see could emerge from this?
Yeah, so one trend I already mentioned, I think there's a trend, for investment away from, kind of the traditional retail, more to industrial, to the delivery of goods. So I think there's a general trend into that aspect. I think there's also a trend away a bit from traditional office towers to more flex office or, residential and commercial mixed use. So I think those are the general trends that are probably global. I'd say the other outcome of the COVID, economy is going to be that, there has been a lot of government spending to support, individuals and businesses. And therefore, I do expect that inflation rates are probably going to go up. And, real estate is a great hedge against inflation, because, the rents are catching up with the market. And also then if you leverage it with cheap debt, you also have the leverage effect on top of it. So I think in an environment where we'll probably have quite high, inflation just from governments printing money, including Canada, obviously, I think you'll be, well based in real estate generally. Of course, on the mortgage side, that protects you, only to a limited level, because mortgages, of course, are paid back at par, while real estate kind of increases in value. But you're getting much better coupons than compared to government bonds. And you're also taking more risk, but you're getting better coupons.
Wenzel, thank you so much for your time, and great information that you provided. And I really appreciate you taking the time to answer my questions.
Thank you, and see you next time.